Hello students, today I am going to explain about the budgetary control. This topic is there in MCOM course. Before starting the topic, what is the meaning of budget and what is the meaning of budgeting? Now I will explain first budget. Budget is a financial plan, it covering the income and expenditures a selected period. Budgeting is a process of creating financial plan for the efficient resources for the useful purpose. So, I given clearly here budget. A budget is a future plan. It is an action expressed in financial or quantitative terms. It is a statement of expected income and expenditure for a period of time. It helps to organization to plan, to coordinate, to control the different various activities. So, what is the budget control? Budget control is a system of controlling cost to the budget. This budget control system monitoring and controlling spending against the approved budgets and compare the actual income and expenses for planned targets. So, this budget control helps to organization financial performance for organizational goals reach. So, this is the budget control. And what is the need of budget? What is the need of budget? First of all, it is a needful for financial planning and forecasting. So, how it is need for the financial planning and forecasting? So, every organization there are different various departments, activities are involved. For each and every department, each and every activity, what their requirement, what is the financial planning and what is the amount involved in future, that we are going to forecast. And second one is the optimization of resource allocation. See, in organization different activities are there, different departments are there. For each department, what are the resources are required? So, according to their need, we are going to allocate the resources. Next one is cost control and prevent the overspending. Some of the departments, for some of the activities purpose, they are going to spend the more money. To reduce that waste expenditure and to control the cost, this budget will help them. And financial decision making. See, every organization they are going to spend huge money for the acquiring of fixed assets and also day to day operation purpose. So, this budget will help to take the financial related decision for the top level management. At the same time, it is going to evaluate the performance evaluation against the targets and support the strategy decision making and risk preparation for the unpredictable challenges. It means sometimes in organization we cannot predict, we cannot expect some risks also. So, to meet that risk, uncertain events, so to face that, this budget will going to be help, and this budget also going to be support to the staff for the main decision purpose. So, this is the need of budget. And what is the objectives of budgeting? So, first of all, there is a planning required and coordination required, budget control, decision making purpose and efficiency measurement purpose. Planning means what? In budget, planning is the very important objective. So, it is a planning means it is a set of financial goals and estimated revenues and expenditure. So, means how much amount we are spending, what is the income we are going to generate in future. So, each and every aspect we are going to be plan. And coordination. See, in the organizations different activities, different departments can involve, and each and every department we have to coordinate. So, balancing way we have to be coordinate with the other departments. So, coordination purpose also this budget will help. And control. See, when the activity levels are involved in the various departments, some of the departments they are going to spend the huge money. So, we can control the cost also. And decision making, where we have to spend, where we should not be spend, and how much we have to spend, how much we have to raise, how much we are able to gather the funds. These all are decision makings. These objectives are useful for the budgeting. What is the advantages of budgetary control? First of all, it is this, with the help of this budgetary control, we efficiently use the resources. Second one is we can control the cost and reduction of the expenditure also, and improve the decision making and performance evaluation and better coordination among the different activities, different departments. So, these are the advantages of budgetary control. Efficient resource use means what? So, whatever resources we have in our organization, either it may be labor, either it may be raw material, either it may be any other source, that all are optimum we are going to use. So, efficient resources we are going to use with the plan of budget. Second one is the cost control and reduction. Cost control and reduction talks about the, so department wise, which department is spending more amount, where we need to reduce the cost, that will be help with the budget. And improve the decision making. Improve decision making means what? To spend whenever we want to spend the huge money, whether capital expenditure purpose or revenue expenditure purpose, to take the decision also, this budget will be helpful. And performance evaluation, activity wise, department wise. So, where when we spend the money, according to that spending, whether they are generating the revenue or not, to evaluate their performance, this budget will help. And better coordination. So, budgeting not for the individual department purpose, not for the one activity, it is entire organization purpose we are going to measure. So, this will help to better coordination. And essentials of request is for budget control. So, what essential requests is or need? First of all, every budget control, they required clear objective. They required clear objective. It means what? So, what purpose they are preparing for budget, and why they are spending, where they are spending, how they are mobilizing the funds. So, need to be clear what they are doing. So, clear objective is required for the to achieve the financial goals. And next one is the, it will be support for the implementation of policies for top level management. So, every top level management, they will take the decision with the help of this budget. And realistic budget based on accurate data. To estimate that, compulsory we require the accurate data. When you have accurate data, then only you are able to estimate properly for the future. And coordination among all the departments, and it is a continuous monitoring process and review system of budget. So, these are the essential requests of budget control. Next one, organization for budget control system. So, what structure we required for the budget control system? First, we required top level management. After that, organization for budget control system, there is a involved budget committee. For that committee, one chairman also there, and budget officer is nothing but a coordinator. And after that, various department managers also involved, like sales manager, production manager, purchase manager, and other members. After that, it is going to be sent internal audit purpose. So, this is the organization for budget control system. And organization for budget control system, we need to discuss about the organizational chart, budget committee, members includes, and their functions. Organization chart talks about the authority rules, authority responsibilities of each and every executive in the firm. This will be enabled to know their relationship between the other executives. It means rules and regulations and responsibilities of each and every executive. Next one is the budget committee. It is the central responsible for overall coordination of budgeting. This committee will decide what to do, how to do, relevant to the monetary policies and monetary actions. And members include, this budget control system includes the members, chief executive members, managing directors, finance managers, production manager, sales manager, purchase manager, and other functional heads also going to be involved in this member of includes. And functions, what they will do, what is the role of this budget control system. They approve the budget. First of all, after receiving the proposal, they can approve the budget, resolve the conflict between the departments and reviews, and monitor the budget performance. So this is the functions of budget control system. And also budget manual. So budget manual talks about it is a written document booklet which specifies the objectives of budget and organization procedures. It is also state that functions and responsibilities of each executive by designation, both regarding the preparing and execution of budget. Generally, budget period talks about the time period. So which budget is prepared for the remains for the operation. So here key factor is the factor activities of the undertaking, which the particular point and particular time period. It will be limit for the output. So it means it is a period, how much period is required, whether it is quarterly or half yearly or yearly purpose we are preparing, and what is the time period that it is going to be talked. And forecasting. So after budgeting, forecasting also very important topic. Forecasting is it means estimation of future outcomes based on the past data trends and assumptions. It is a predict might be happen in the future. So forecasting is the estimation of future. How it is going to be estimate based on the past data, past result and experience of the top level management and their assumptions. They are going to estimate future outcomes. So whatever they forecast, whatever they estimate, it may be happened or not, but they are going to estimate based on their assumptions and past experience. Examples: sales forecast. See, based on last year sales, previous year's last 2 years sales, we can predict for the next year sales. So like that, not only sales, production also we can predict, and not only supply, how much raw material we require, that also we can predict, and cash, what is the liquidity position we require for the next year also we can predict. So it is depend on variable, whatever we required we are able to predict, we are able to estimate for the future based on the past data. This is called as a forecasting. What is the difference between budgeting and forecasting? So here few aspects we need to consider. First of all, purpose. The purpose of forecasting is predict future trends, but in case of budgeting, plan future actions. And nature, it is estimative, and budgeting is a prescriptive. And time, generally forecasting usually we are going to use long term, and budgeting is usually short term. Flexible, forecasting is the more flexible, but whereas budget is it is more rigid. And use, forecasting help for the planning and budgeting will help for the controlling system. So these are the major aspect of differences between budgeting and forecasting. Now what are the types of budgets are there? Generally budget types we classified 3 categories: on the basis of time, on the basis of function, on the basis of flexibility. First I will explain about the on the basis of time. On the basis of time, again we subclassified, that is long term budget, short term budget and current budget. So on the basis of function, again we subclassified into 3 categories, that is operating budget, financial budget, master budget. On the basis of flexibility, we classified into 2 types, that is fixed budget and flexible budget. This fixed budget also called as a static budget. So in operating budget, again we subclassified, that is material budget, production budget, sales budget, labor budget and overhead budget. Let us I will explain individually budget wise. According to the time, classifying of budget by time horizon, as I said earlier, long term budget, short term budget and current budget. Generally this budget is primarily classified based on the duration of the duration they cover, the influencing their purpose or scope of financial planning. So based on time period we classified these 3 categories. long term budget. So, long term budget generally this budget more than 1 year exceeds of 1 year, and it is typically 3 years to 10 years generally we are going to observe. This planning will be here, involved in large investment like expansion or research and development cases. Generally this long term budget will help to for the management acquiring the long term properties only. And short term budget, usually this budget covers less than 1 year. So, this focusing on operational planning purpose and routine business activities such as a monthly sales and quarterly productions and whatever targeted production is there in the short term period, that we are going to focus. And current budget talks about this is for immediate period budget. Generally it is going to be observed monthly budget, weekly budget. So, updated frequently. So, every time it is going to be changed. So, to estimate the 1 week purpose, whatever liquidity we required and whatever cash position is there, and next month what are the expenses we are going to face. So, that all are we are going to cover in the current budget. Detailed I am going to explain now. Long term budget. So, generally this long term budget every organization for the strategic purpose they are going to use. So, here in this budget they are going to spend the capital expenditure. So, in the capital expenditure how they will spend, in the organization acquiring of fixed assets, huge amount spending for the research and development purpose, and acquiring of plant and machinery purpose. So, long term purpose for the achieving of long term goals they are going to spend this long term budget. So, this is the long term budget. Next one is the short term budget. So, short term budget it is also called as a operational budget. It is simply we observe that sales budget, production budget and operating expenses budget. So, again the sales budget, production budget, operating expenditure budget, expense budget we are going to discuss. So, I will give that meaning of sales budget, meaning of production budget and operating budget. So, to estimate the sales, we are going to prepare the sales budget. To estimate the purchase, production, what raw material we required, what labor we required, what is the how much cost involved in the production. So, to know that cost of production we are going to prepare the production budget. And operating expenses budget. Generally to managing that organization, whatever the management related expenditure there, that amount we are going to be spent here. So, current budget, weekly budget, monthly budget, as earlier said, this is as per requirement, as per convenient to run the day by day business, the day to day expenses we are going to consider in the current budget. And functional budget, we this is the second category of budget after time period, basis of time period. Second one is the functional budget. Functional budget again we classified operating budget, financial budget and master budget. Now, I will explain operating budget. So, operating budget means what? See, operating budget, this is the backbone for the this budget is backbone for the every organization. Here determining the expected revenue in this budget, we are going to determining expected revenues as well as expected incomes also. So, this operating expenses also we are going to be estimate. What purpose we are going to use this operating budget. So, this budgeting is a day to day activities like productions of sales and administrative functions. So, whatever the cost incurred, these purpose we are going to show in the operating budget. And what are the components are involved in the operating budget? Generally in operating budget, the cost of elements whatever we have like material, labor and other expenses. So, these elements are involved in the operating budget. And production budget, what is the meaning of production budget? Production budget talks about the cost incurred for the producing of some products. So, generally it is derived, this budget is derived from the sales and also it is inventory consideration and To calculation of this production budget, we are going to use that formula sales plus closing stock of inventory minus opening inventory. So, this production budget prepared by the production manager showing the forecast of output. Next one is the production cost budget. See, production cost budget, it is total cost of elements like material, direct labor and direct expenses. In this production cost budget, only direct expenditure involved. So, only direct expenses only we are going to take. Simply this production cost of budget we can call like prime cost. Sales budget. Sales budget means what? The forecast the sales, estimation of quantity and value of future sales, it is called as a sales budget. It is the foundation budget for the other budgets. So, based on this sales budget, we are going to prepare the remaining budget. Details, it includes the product line, means what are the type of products are we are producing, where we are selling, which place we are selling and what time period we are taking, that all are we are going to be considered. Next one is the administration cost budget. Administration cost budget estimate for the all expenses relating to the general management and administration of the businesses. So, administration cost budget generally what we are going to observe, for example, director fees, managing director fees. So, those who are involving admin purpose, whatever amount we are spending for the supervision purpose, so that all the cost we consider as a administration cost. And overhead budget. See, overhead budget means it is the aggregate of all indirect expenses. So, in the production only we take a direct expenditure. In case of overhead budget, we are going to consider other than direct expenses. It is nothing but a all aggregate of indirect expenses we are going to be cover. So, like other indirect expenses means what? So, whatever expenses incurred in the production which we cannot traceable in the production, so that all expenses we treated as a overhead budget. This is also called as a indirect cost. And production overhead budget. Production overhead budget means what? Whatever amount we spend indirectly in case in the particular purpose of production. So, that also called as a production overhead budget. So, whether it is overhead cost or production overhead, so these all are indirect expenses only. Next one is the selling and distribution expenses. Once the manufacturing completed, we need to sell our product. So, to sell that product, whatever cost incurred, that cost is called as a selling and distribution cost budget. Generally, selling and distribution cost budget estimate the all costs relating to the promotions, selling and delivery of product to the customers. So, examples: advertisement expenses, sales staff salaries, commission, logistic and warehouse expenses. These all are the example of selling and distribution expenses. And financial budget. Third one is the financial budget, safeguarding the resources. Generally, this financial budget talks about the cash budget and capital expenditure budget. First, cash budget we will discuss. Cash budget means what? See, cash budget is a financial plan that estimates the cash inflows and cash outflows over a specific period of time. It helps to ensure that business has enough cash to meet the obligation of the organization. So, what purpose we are going to prepare the cash budget? Ensure that liquidity position and plan for the short term borrowings or investings and avoid the cash shortage or surplus and control the cash management effectively. So, this is the cash budget. What are the components are involved in the cash budget? Generally, cash budget we are going to prepare all inflows, we are going to consider all cash inflows as well as cash outflows. In cash inflows, it covers cash sales, collection of debtors and other incomes. So, like whatever organization received that cash, that all are part of the cash inflows only. So, cash outflows, when organization need to pay outside, that all expenses we treated as a outflows. Like example, payment to suppliers, wages and salaries, rent, utilities purpose, operating expenses, capital expenditure. So, these all are cash outflows. So, when you are preparing cash flow, cash budget, we are not going to see the nature of expenditure. whether it is revenue nature or whether it is capital nature, we have to record it. Simply, while preparation of this cash budget, only we have to consider two aspects, that is cash receipts and cash payments. So, that only we are going to consider. First, whatever opening balance is there, after that you can add the cash inflows, then whatever payments are there, outflows, you can deduct it, then you will get the closing balances. So, like this we have to prepare the cash budget. And next one is the capital expenditure budget. Capital expenditure budget shows that estimated expenses on long term assets that help to business future production and growth. So, this capital expenditure budget is nothing but it is a plan to acquiring of fixed assets and fixed plant and machineries. So, plant and machineries, long term properties. It means while using of these properties, we can generate the revenue for the future. So, example of capital expenditure: purchase of new machinery and equipment, and construction of purchase of new building, purchase of land, major renovations or upgrades, investment in new technology. These all examples are amounts we are going to spend for long term purpose. So, when we spend amount for this purpose, this all will be help to generate the revenue in future. So, these all are going to be help to generate the revenues also. Next one, after cash budget, one more important budget is master budget. It is a grand financial blueprint. So, master budget is a consolidated budget. It is aggregate of all budget. So, here all budgets we are going to take the considering of preparation of master budget. It is a comprehensive plan and it is a summary role of all the budget. In this budget includes sales budget, production budget, operating expenditure budget, capital expenditure budget and cash budget. And budgeting on based on flexibility and fixed. So, here two budgets are there. First one is the fixed budget, second one is the flexible budget. So, fixed budget means what? It is a fixed budget means it is a single activity level budget first of all. So, whatever activity will change, the budget will not be going to be changed. It is fixed. So, it is not going to be revised activities. It is best for stable of environment. But whereas flexible budget, it is adjusted based on the actual activity and measure accurate for the performance analysis. I will give the detailed. What is the fixed or statistic budget? A statistic or fixed budget is prepared for one level of activity. This means that it does not change even if the actual output different from the planned level. It serves a benchmark primarily useful for the organization with the stable operations. Generally, this budget is fixed and it will not be changed. It is always constant when the activity change, when the level of output change, but budget amount is not going to be changed. Characteristics of fixed budget: it is single activity level and fixed benchmark and predictable operations and cost control focus. Next one is the flexible budget. Flexible budget means according to our requirement, our activity level, we are going to adjust the budget. It is not like fixed budget. According to your requirement, you can change. So, this is called as a flexible budget. In flexible budget, characteristics of flexible budget: adjustable for the activity level, performance evaluation tool, variation analysis, cost behavior focus. So, this is the total summary of all budgets. So, from this class we are able to learn theoretically what are the types of budgets are there, what are the sub classification of budgets are there, where we are using this budget, what is the meaning of budget and forecasting, and how it is useful for the organization, what is the main objective of budget. These all are covered in this class. Thank you.